probably around next week. Looking Nasdaq. So I'm and I haven't taken any new trades, but I am still bullish and hold my buys. I have also on the mines. Roll down the mines of today. I have already published this one. I mentioned already how today trading day will be, and it was, I think, 1 hour before the opening bell of today, and it seems that is like I said. And also 20 minutes ago now, some member of the Federal Reserve was interviewed, and she was saying that tightening of the interest rates, US interest rates, is not off of the table. So the market was watching or was waiting for what she's saying, because next Tuesday we have already the next FOMC minute on Tuesday. So keep eye on that. And therefore, if you look on this chart again, okay, so I show it again where it is exactly. You go on the mines, you must scroll down, and then you find here my graph here 2 hours ago, okay, with one seller. I think he or she was not agreeing with that, whatever. So then here I have already mentioned the level, and also on my last screen and also on my YouTube I have uploaded. You can go there, watch also the video on my YT channel, and if you'd like to subscribe, if not, is okay too, but it's just for educational purposes, okay? So for people who are interested how to trade with trend and divergence, for example, like these days, so you will be able in the future better to make your trading strategies, or to plan your trading strategies even before you enter the market. Let's say you come at the office, you just see at the chart, we exactly know today we will have a trend day or today we will have a divergence day. So divergence day is, I have already mentioned in the last streamings, please watch them. So I'm not going now to mention that very far. So in this chat here, and again, I told you that between 15,600 and 15,513, we have the open gap here in this bullish trend. This was after the CPI data, what is very, very strong, extremely strong, and that's pushing Nasdaq up the whole week this week. So we got then a new weekly high here at around 15,900 something. Then we had the correction and profit taking phase of the market, because the market, there are some market participants who have been taking profits and waiting for the next FOMC meeting on December. Right? So that's around in 2 weeks. And currently the week data, the market data have been released, are confirming that the trend of the Nasdaq is justified, the uptrend of the Nasdaq is justified, and that's the reason that also the US dollar and the bonds are going down. So yesterday, today, and I think on Wednesday, yes, Wednesday it was, we have since 3 days now a consolidation or divergence days, meaning that we have indicator divergences, for example, with RSI and also intermarket and intramarket. So I wrote it also here why I see and think that we will have this type of movement. For example, you can read here, um, we stay bullish, take only buys, but we don't expect that the market will do new daily highs today. And we see exactly it's happening now. So until now, we haven't made new higher daily highs. I must now correct this one. What I meant was weekly high, because we had already a new daily high that's higher than yesterday. So a new weekly high. The new weekly high is at around 15,926 or 30, something like that. So you must check that, please. And we have, for example, intra-market divergence. If we look inside the Nasdaq index, we see at the market watch here that there are some stocks that are green, for example, Amazon or Tesla or JPM, AMD, and so on. They are bullish, but today Apple is, for example, bearish a little bit. So this is the intra-market. The inter-market meaning that yesterday was exactly the opposite. Nasdaq and S&P 500 have been positive or bullish, but RTY was bearish, and today it's exactly the opposite. RTY or Russell 2000 is bullish now, and Nasdaq and S&P 500 are bearish. Then we have intermarket divergences, correlation divergence. For example, the US dollar is negative, but Nasdaq is also negative. So it's meaning that the market runs from a level to a certain level higher and then comes down again to a certain level and goes higher to the prior high again, or highest level it was at the beginning, right? So that was also the reason that we have here 4 different scenarios. So I mentioned that again. As the trend is bullish, the fundamentals are bullish, we have the power of the bulls on our back. So we wait until the market is coming back to the broadening pattern what we have already. So at around, let's say, 15,697 to 15,733, and then we take a buy. Where can we put our profit taking? On the high of the day of today, right? So, and we see the market ran then short for a short time below 15,800, and then is up again at around 15,800. So now we have the launch time on the same time, meaning that the market is the traders are at lunch now, so they have been expecting some way what the Fed members are saying. The most important event is for the next week. So, and on the FOMC meeting, the opening of the week will be very important. So today we need to know, first of all, where the market is closing. Let's say the market will close. This is today's move, and we see we have very low volatility. You see that? So this is the high of the week. This is the today's price. So we need to know where is the last price traded today. And the last price traded today, the closing price of today, is on the same time the opening price of Monday. So how next week will be? The next week we will see how the Asian or Europe will open first before the US open. US session is starting, and if the market is opening below the opening, if the market is opening below the closing price of today, what will be on the same time the opening price of the next week? The market will go down first a little bit, but to what period? Well, on Monday, I'm expecting also that we will have a kind of divergence. I tell you also later why. The market will go probably to the levels we have already signed up, and I showed you on that graph. So to around 17,000, 15,700, above 15,700. So to the higher level of the gap, okay? But immediately will come back again to the opening price. So it would be a good trading strategy. We wait until the market is reaching the high, the lowest price of the day possibly, and makes its bearish move first, and then we jump into the market. We can take an upside trade, but the profit taking will be the closing price of today. Let's say now in 1 minute the session is over, the current price is at 15,813, and that means that we wait then next week. It's all here now on the 1 hourly chart. I make it a little bit on 5-minute chart. We can see that better. So let's say here will be at this level at 15,813, where the price is, so will be the last price of today, okay, closing price. And on Monday the market opens immediately below that. It can also happen that during the day the market is going up, but we don't take that trade, because it can also happen that after the opening price the market is making a bullish, a short-term intraday bullish trend, and then falls below the open. If it happens, we don't even take that short selling. We wait until the market comes down to this low area of today. It would be then the low of today. Better, the market comes back to around 15,737, and this 15,737, that area is on the same time the high of the gap here. But on the same time, if we can see, it will be also the low of this week, okay? And the low of the weekly lows, or the highs and lows of the weekly time frame, the pivots, the supports and resistances of the higher time frames, especially if they are daily, weekly, monthly, or yearly, are more critical, and they are much more powerful, right? So for example, on 5-minute chart, we can see here, we have also a local support here, we have a local bottom here, we have here resistances here. Here we have some kinds of resistances, but on low time frame. So they are not so meaningful. You can act with that, right? So, but the higher the time frame, the more meaningful, the more powerful all those levels are, because the big money, the smart money, is acting on higher time frames, not on low time frames. So there we expecting the big volatility. There we expecting the big moves, the big buys, or the big short selling, or whatever. So, and therefore this level at around 15,700 and 34 is the low of this week. On the same time, it is also the opening of the week, because if you can see here, we had the gap also in the previous week. The market went higher a little bit. So this area is on the same time the opening price of this week, right? So it is beginning with 15,814, going back to around 15,737.20, something like that. So this area is the opening price of this day, which means we will have a very big supply and also very big support here. So, but once this area is broken on Monday, the market will target the next one, the next level, and this will be 15,500, 15,550. And this is then where we had the gap. Also, I need to mention that on the same time, we are in an uptrend, right? Do not forget that. We see that during the last days and weeks, the market made higher opens, the market made higher closes, the market made higher highs, and the market made higher lows. So we see here, for example, it was the beginning then at this level, we had then very strong resistance because we have been in the bear market as the US dollar was strong at that time. And then the market then broke that resistance because A, we had very weak data, what was good for Nasdaq, and on the same time negative for the US dollar. B, the market had very strong momentum, and C, what is very important, we had a big weakness in the US dollar. So then if we look, for example, at the US dollar, now the US dollar, what is very important measure? So I did it, I think, on the important. Even today, the housing starts have been somewhere a little bit strong today, but the reaction of the US dollar was, and I made also that graph, you must go to the DXE chart and then on the mines you find it. So once the US dollar pulls back above 104 and 0.05, it means that the Nasdaq will go down because this is not good price for the Nasdaq. As long as we stay below this level, and we see now at the price very well, 103.61, the Nasdaq is going up a little bit. So that's the pendulum, or also the divergence of the markets that has also impact on the US dollar. So currently the US dollar is going down again, and we see now Nasdaq still is going higher a little bit. We see here now the changes 13 point, 12 points, then 11 points. We see then well here the correlation. As long as the US dollar stays below this level of 104 and targeting 100, the Nasdaq will rise and rise and rise and rise again. So therefore, and also the bond markets, they act the same way. Therefore, our strategy is all the time, since we have been at 14,200, the strategy is that we stay long and we just take the bullish trend. Of course, in the meantime, you can also now say, okay, you want to take some short trades. I won't do that. I won't do that because the market turns back very fast if you are going against the trend. And with this criteria, we need to know that since 2021, the beginning of 2021, the stock markets were falling. So big investors, hedge funds, big speculators, big traders, they have been sitting all the time on their longs, and they have to show positive results to their clients, okay? And now these market fundamentals have been changed, is very welcoming for those traders, and therefore they are trading very aggressively. On the other side, have been disciplined a little more because now they are respecting the Federal Reserve much more than what than 1 year ago. 1 year ago, if you would ask any trader, the majority said, I don't care what Fed is saying. We traders, we have the power. But we have seen the Fed has the real power, and the Fed proved that they can control the economy and they can control also the stock market if they want. And now they are looking at what Fed is saying. They are closely watching and listening to every single word. So they're respecting Fed now very much. Okay. So at this season now, we see now that more Fed members are announcing, okay, we are thinking our target is inflation at 2%, and we are looking ahead to tighten the interest rates if necessary. So, meaning that they are not going to hike the interest rates, and if necessary, they are going also to cut the rates again. And that is caused by the bond market. That's also the reason that the bond market is going down. The result is that China and Japan, for example, the biggest, and Saudi Arabia, Russia, the biggest holders of US Treasury bonds, have started to sell the bonds, but since a long time ago, slowly, and now they are doing it much more faster because they are intending a de-dollarization. Therefore, China, Russia, if they are dealing, for example, in crude oil with Saudi Arabia, they are not paying any more Saudi Arabia US dollar, but they are paying them in their own currencies. For example, China has deals also with Iran and some other oil production companies of OPEC and OPEC Plus, and they are paying them with yuan, Chinese yuan. And that way, we are talking about the trade war, right? Because they are now fighting who is the strongest economy. Of course, we know that the economy, Chinese economy, is going down a little bit, but the trend is up, but the trend is weakening. And that's the reason that they have focused now on selling the US treasuries as much as they can. On the same time, the effect is that the Federal Reserve will print much more dollars in the market, is meaning that the supply for the US dollar is going up. If the supply for the US dollar is going up, meaning that the value of the US dollar comes down, and that will have the further effect that DXY and the dollar is going down much more. And on the other side, that will be celebrated by the stock market. So the weekly trends are up, the minor trends are up, and if we look now, we see here on the daily trend is up here. I'm sorry. We see here the dollar is in negative territory. We can check it here, right? So we see here that S&P and the Nasdaq are below. The zero line is exactly the same. There are red, and the RTY is green. That's here. So that's the daily trend. But most importantly to me is the 5-day and the 8-day trades, because these are the most important trends that are driving currently Nasdaq and Forex market, especially the US dollar. And we see in both major trends, the US dollar is down, while Nasdaq and the two brothers are still up. So the 3-day trend is also getting up all the time for Nasdaq, but we have signs of divergences. So my prediction prediction for the forecast for the next week will be we stay long. We will have also we stay bullish next week. We are not going to make higher highs. It can only be changed only if divergence of the bonds will be over and the RTY trend we see here, the major trend for all three indices is up, but the 3 days trend for Russell and also the 2 days trend for Russell is still negative. And if Russell can turn that bearish 2 days and 3 days trend, can change that into bullish, then we will have definitely a big chance to break the highest high of this week at around 15,920 or 30, something like that. And then we are making higher highs. The next target will be then 15,977. Once breaking that, we will go to 16,000 territory. How far we will go? Well, it depends on what Fed members or Mr. Powell on next Tuesday in the FOMC meeting minutes will say. It takes only 5 minutes, I think. Therefore, it's called FOMC minutes. And the main, and that is a prediction what will probably happen in the at the first week, on the first week of December, because there we will have the FOMC meeting and there we will have again the non-farm payroll. That's very, very important. So keep eye on that for what is coming next Tuesday. Don't rush, don't rush the market. So stay a little bit patient. I mean, during this time you have been very patient. That's very good. So next week, if we are getting these lows and if the lows are not breaking down, then we probably will take then some long trades, but the profit targets will be then at around these highs, okay, something like that. If the market is breaking down and it will consolidate probably until Tuesday evening as the FOMC meeting minutes get started, and then we will have then the next move. The market can then turn back if the speech of the Fed members will be positive for Nasdaq, negative for the US dollar, meaning if they say, okay, right, we are not going to rise the interest rates, the data have been weak. That's exactly like just like we wanted to see that, something like that. Or it can also happen that the market goes a bit deeper, meaning if they say, yes, but at this moment, the weak US dollar will cause some kinds of recession and we don't like it too. So probably we will raise, but what we see, we will see. And if they talking in that manner, it means that the market immediately will go down again, meaning that the US dollar will go up. And once we see that the US dollar is going up, Nasdaq going down, what can we do? We immediately liquidate and execute all our bull position. We go short on the same time because that's a clear bullish sign. But more importantly, not only on daily basis, but also we see how the US dollar trend and the Nasdaq and the other indices trend are on 3 daily, 2 daily, 5 and 8 daily. That's are the most important trends. So we keep eye on that. So therefore, this method has been working very well in the past for me personally, and that so I can show it here. Strategy. So meaning at the end of the year, they close and we see then how the trend was. And we have here, for example, the beginning of the bearish trend. Then we had here bearish trend. What we have been expecting that the next week the market will be bearish, but we will have divergences, and exactly that's happening. So, and this week is exactly the opposite. Since here we are expecting that the market is going up, but is bullish, yeah. So we will have, so therefore I change here the color. So the market will go up, but we will have some divergences, meaning for the time being, we will have also next week, we will see these prices again, but we should be aware, and it can happen only until the next Tuesday or next Thursday, next Tuesday or Wednesday, I'm thinking. So the day after the FOMC meeting, we have the US banking holidays. And then on Friday, we will have the very important data, the PPI again, and the market probably will also continue to go for that. And once that data is weaker, then I can say certainly we go immediately higher. The PPI is very, very important data for Nasdaq, as it is the measure of the producer price index. So for the time being, my prediction is that the market next week will continue staying high. So we're taking only the bullish signs, but we have now signs of divergence because this week we had already these divergences, and we take these divergences from this week to the next week. Okay, so and you see in the meanwhile now the price is coming back again to 15,829, so to the old highs of today, and stays there, and then probably goes a little bit higher but coming down again to the lows. So but we stay in this range today. Okay, so have a good trading day further, have a nice weekend, and have a good trading week.